In 2005, when His Excellency the President promulgated the Mahinda Chintana, it set out the direction of our country for the next 6 years. And thereafter, once again, in 2009, end of 2009, beginning of 2010, he once again articulated the vision for the next several years on the basis of Mahinda Chintana vision for the future. And these two missions and the visions that the President articulated has by and large been achieved to a great extent. And now we need to move to the next stage of development. And since those measures have been already within striking distance by 2016, we got to now set our sights beyond to the 2020. So this is the articulation of some of the suggestions that the central bank has made. It's up to the government to implement. But in our conversations with the Secretary to the Treasury, there has been general acceptance to move in this direction, and I believe Sri Lanka would be focused for the future in that direction. As you also know, sometimes politicians do not like to take risks in saying what the targets are going to be. In fact, in 2011, when the managing director of the World Bank was here in Sri Lanka, what she told me was that your president has taken a huge risk in stating that the country will move towards a $4,000 per capita income by 2016. Because many politicians don't do that. Politicians don't like to say what they would want to do, so that at the time when that period comes, they can always have some excuse. But not so our president, and he articulated the vision and a very clear target which the entire government sector worked towards, and that is why today we are able to look back on some of those strategies and say that we have come to that point where we can say we will truly achieve. Let me take a quick look at the last 8 years and give you a snapshot as to where Sri Lanka has been and where we are. Because lots of times what happens is we only consider what is prevalent in the current periods or current times, and we don't go back and see where we were some time ago. Now, if you do that, you would find that our GDP growth in the years 2000 and that era was only around about 4 to 5%. Today, we are consistently hitting growth of nearly 7.5% to 8%. And the last 5 years, we would have an average growth of 7.5%, and that too in an era where all over the world growth is struggling. Per capita incomes will probably reach 4,000 or exceed 4,000 by the end of next year, and we will be pretty close to $5,000 by the end of 2016. Unemployment has come down to around 4%. Inflation was one of the key ingredients in our country, where since the time of our liberalization of the economy, Sri Lanka had an average inflation of around 12%. Now that's a very high number, and I remember people remarking that it's like a person having a temperature of 104 degrees for a period of 30 years. Today, that is a thing of the past, and our inflation levels are around the 4 to 5% mark, which is manageable, and that's something that we would like to preserve for the future as well. Our reserves have gone up, our exchange rate has been stable. Our exchange rate from 1977 to the year 2005 had an average depreciation of 9.9%. That is, every year there was a depreciation of about 10% of our exchange rate. But in the next 7 years, it was only 3%, and now it is stable, and there has been no depreciation, and in fact there has been an appreciation of our currency. Public debt, which many people have been talking about, was as high as 102% in the early 2000 years, and when the president took office in 2006, it was 91%, and today it has come down to 78%. And notwithstanding all the investment that has been made in our country. Then stock market, tourist arrivals, all those I don't want to go into detail, but you know that it has happened in a very significant manner. Going forward, if you look at the post-liberalization period of our economy, and if you track the growth as well as the inflation together, you would find that the only 4 years that we have had high growth as well as low inflation has been the past 4 years. Every other year it has been high inflation and perhaps even high growth in some instances, but it has been corrupted by the high inflation, and therefore it has been not of that great value. So now we have moved into a new path in our country, and these have been also acknowledged by institutions like the IMF. And today Sri Lanka has moved from a previous vicious cycle that we were involved in, where we used to have high inflation, to high interest rates, to low investor confidence, to sluggish investment, low growth. That cycle has now been replaced by a fresh cycle, which is low inflation, real interest rates, enhanced savings, and regular pipeline of investments, leading to low fiscal deficits and once again to low inflation. So it's a new cycle that we have moved into, and the challenge for us is to preserve that cycle in the midst of all the challenging developments that will take place. So per capita income would reach $4,800, as I mentioned to you, by the year 2016, and an important milestone would be reached by our country at that time when we reach a GDP of about $100 billion. It's only then that outside people, outside countries, international organizations take note of Sri Lanka, when you at least reach a $100 billion GDP. And we started talking about a $100 GDP when the GDP was only $24 billion, and many thought it was not possible, many thought it was not going to happen, but today we are within striking distance and it will be reached by the year 2016. So on that platform, since the discussion today that the Honourable Minister has invited all of you to is about the future as far as the investment that is needed to take Sri Lanka forward, let's have a quick look at 2020, and I would also move the discussion mainly to the areas which I believe research, development and technology could play a part in that overall scheme of the country going forward. 2020 would have a GDP of $150 billion, and our per capita incomes should rise to $7,500 per person. Economic growth, we expect it to be in the range of about 8% based on the investment that we are envisaging that the country would have. Inflation, we are hoping to maintain at the low middle single digits. Poverty at very low levels. As you know, poverty has been coming down sharply over the last few years, and we expect that trend to continue. Unemployment to be at very low levels, and that's a challenge as well, because we got to shift some people from different professions to new professions, which means that the earlier professions have to become a lot more productive. Malaysia did that with their Vision 2020, where they said that the agricultural production should be doubled with half the population in agriculture. It was a very tough call, where the productivity was pushed to 4 times what it should be, and that is where we believe technology, research could help, so that those can be focused towards improving the productivity levels of different parts of our economy. We would have a debt to GDP level which will come down gradually to around 50%, current account at surplus, and a Sri Lankan rupee which would be gently appreciating in line with the new macro fundamentals. We expect the business outlook also to improve, doing business ranking to improve, and we also would like to see advanced technology being used in an industry supported by intelligent workforce. Now we need to have strategies that will make that happen. Central bank is the institution which will be the breeding ground for new thoughts, as well as to enunciate those thoughts and articulate those thoughts. But at the same time, other ministries, the private sector, all need to work together in order to make that vision a reality. So we expect all stakeholders to move in that direction, where advanced technology could be made use of, new trends could be made use of, new businesses could be started up, new innovative schemes could be supported, so that we would be able to then move the country to the new area that we are trying to reach out to. The economy also would undergo a paradigm shift. As you know, 5 hubs were articulated in the 2010 Mahindra Chintana, Vision for the Future: maritime, aviation, commercial, energy, and knowledge. So knowledge is a very important component of that overall scheme, and that's something that the Ministry of Technology and Research could also be involved in order to ensure that the knowledge economy that we are searching for, where Sri Lanka needs to move into the next plane of development, could also be realized, with that hub being promoted in a very intricate manner to take us forward. We would ensure that the financial sector is kept stable, and also that the Sri Lankan business conglomerates are able to also do business all over the world. And we are sure that the skylines of our country would also reflect the new Sri Lanka that we are looking at. 2020 would also have a new sector composition. Our country would not only be the former agriculture-driven country, we would have a greater focus on the services sector, which you are going to speak about now, especially the IT and the technology sector. And we expect the services sector of our country to contribute nearly 60% of the total GDP of our country by the year 2020. And we also would have new components in our GDP composition. The left-hand side of the slide shows you what the GDP main components are in the year 2013. And that will be broadened by the year 2020, and we have already started that process, where we are tracking the developments in each of those areas. And there will be new areas, particularly in the industry and the services sector, which will capture the new developments taking place in all those sectors. For example, we'll have the new sectors of apparel. Today, apparel is part of the industry sector. We will highlight it separately. We would have other manufacturing also coined up separately. We'll have oil and gas exploration, marine and aquatic resources as a separate subheading in the GDP composition, and also technology and innovation. In the services sector, we see several areas which would be of interest to all of you, particularly communication and IT, insurance, real estate, healthcare, entertainment, educational services. All would be new sectors that we would track in order to give a dimension which hasn't been given hitherto, so that people can focus on those areas when going into the future. We will have new milestones and mileposts for the country: poverty, unemployment, malnutrition, electricity coverage, literacy, computer literacy. These will be the new areas that we need to work towards, and already there are steps that are being taken by many people to take us forward to those levels, and we expect those also to be driven in the next few years. We would also have a great bias towards exporter services. I have seen some criticisms that have been made by various people, where they say our trade as a percentage of our GDP has come down. That is because they track only the trade of goods. Sri Lanka is no longer a country which is only exporting and importing goods. We are also exporting and importing services. Tourism is one of those, banking is another, insurance is another, software is another. So these are the new areas that we will have in our economy, and we would have imports and exports of those services as well. And we expect those to dominate our economy in the next few years, And that's why a greater focus on IT and BPO services, knowledge economy services, would be part of our overall structure of our economy in taking it forward. And we would track those also in the future, and we expect by 2020 IT and BPO services to be 2 billion. Maybe it can be even more. Today I saw the Tea Traders Association chairman has made a comment that they expect by 2020 the tea exports to rise to $5 billion, whereas we have only very conservatively estimated it to go up to $2.5 billion. So we'll be very happy if that happens. And we believe if the industry also takes ownership of these targets and want to exceed those targets, there would be opportunities for them to do so, and we would like to see that also taking shape. What needs to be done? It's one thing to articulate, it's one thing for us to have these visions, but it's another to pursue those visions with a dedication and a commitment. I think what the last 8 years has taught us is that if you were to reflect on the goals that we have set for ourselves and diligently pursue those, you would find that many of those could be achieved. I remember the first time when the Mahinda Chintana was being articulated, there was one paragraph, I think Mr. Ajith would remember, which said that we would build, that the President would ensure that we build 20 flyovers. There were many who at forums like this questioned us and said, how on earth are you going to build 20 flyovers? Today if you go along the Southern Expressway, you would count 50 flyovers. That's the extraordinary change that has taken place. But the mindset in 2005 was that even 20 flyovers couldn't be built. So today, when we talk about what needs to be done, there would be instances where people could be skeptical, would say, no, this may not be possible, but we need to pursue those. And I think that's what I am very happy that you are doing, Honorable Minister, to have a forum of this nature, to search for ways and means in order to make those visions to be a reality and to get the investment for that. And I think we should all ensure that we support that kind of venture, because we believe that it's only with proper discussion and with proper planning that we can achieve those goals, and we need to pursue those with a very deep commitment as we go on. So to do that, we will have to have our sound macro fundamentals and trends to be maintained. Many people discount the benefit of these sound macro fundamentals. Many people say, why do you need to have good reserves? Why do you want to have inflation down? Why should you have good macro fundamentals? If the opposite was happening, where would be the investment? Up to 2005, the average foreign direct investment that came into our country in the previous 5 years was only $181 million. But in the last 5 years, our average foreign direct investment was more than $1 billion. So the change occurs only if people have confidence in the economy. Would we go and invest in a country where there is 45% inflation? Would we go and invest in a country where there is a major complication as far as economic structures are concerned? So the same applies to us as well. When people come from outside and they want to invest in Sri Lanka, we got to ensure that the macro fundamentals are stable. So there's a huge necessity for us to ensure that the macro fundamentals are in good shape, and that's something that we'll have to do in the next 5 to 10 years as well. Then the economic diversification program would need to be strengthened further and to be supported. And I believe that's what you're also trying to achieve, the knowledge economy, the benefits of the knowledge economy, not only mere research, but the research being translated into the economic resources and economic benefits, which is very important. Jobs, investment, exports, all that is part of the parcel of the research and technology that we must have, and that's something that we would be looking towards the scientist community and the innovative structures community in order to deliver for our country. At the same time, the others also must continue. The aviation hub, the maritime hub, the commercial hub, you see the developments taking shape right across the country. All that is for that purpose, and that will need to be supported as time goes on. At the same time, the countrywide infrastructure development would also need to be focused upon and developed all the time. There is no level of infrastructure that can be said to be complete. The US has just estimated that their next wave of overall development in infrastructure for the next stage of development of their country will be $10 trillion. And I believe, notwithstanding all what they say, some of them are also looking at China to be the key investment partner in that exercise. And I think it's necessary for us to renew our infrastructure all the time and to ensure that the infrastructure keeps pace with the development activities so that we can actually be in a position to have infrastructure supporting business, supporting industry. Our doing business indicators have to be improved, as well as our sovereign ratings, and we are working on those measures as well. And we would deepen the financial sector so that the financial sector could also support the real sector. In a country, you get the real sector, which is the actual work that is taking shape, the factories, the businesses, but at the same time, those need to be supported with the financial sector, where there is money being supportive of the financial sector, coming from the financial sector to support the real sector. So we have to ensure that both these components work hand in hand, and we are taking the steps to take that forward as well. The labor force would need to be developed, particularly the labor force that will need to be developed for R&D purposes, for information technology, as well as for the knowledge economy. That will have to be focused upon, and I believe work is being done even by the ICTA, handled by the Honorable Secretary to the President. And the private sector would also need to be continuously facilitated to become even more vibrant in all these areas. At the same time, a continued flow of capital should occur in the country. Approximately 35 to 36% of GDP will have to come in each year to support the growth of about 8%. A part of it will be locally, a bulk of it will be from local sources, but at the same time, a certain portion will have to come from outside as well. That is how the mix has been looked at, and we want to ensure that that kind of mix of our investments would ensure that the 8% growth is sustained all the time. At 1:30 in the afternoon, if you go out onto the roads, you will see thousands and thousands of children coming out, laughing and joking and having a good time. But what you must realize is that 400,000 such children would come into the job market each year. So unless there is investment also with a pipeline that will be strong enough to support the new jobs that will have to be created, a certain number of those children would be without jobs. So the responsibility for us is to ensure that the investment pipeline is kept supported all the time in various fields, so that children of all different skills, all different knowledge bases could also find opportunities in that new scheme of the economic development. So that's a struggle for us, it's a challenge for us, and that's something that we all need to focus on, and that is why we have opened up the avenues for FDI, for capital inflows, commercial borrowings, the investments to be reinvested. So all that is important for us to make sure that it happens. The investment transmission channels also have to be smoothened, and that's something that we have been working on in the central bank. And the capital flow system would also have to be well managed. Now all these are the building blocks that provide the framework for the others to work towards in order to do their jobs better. And we'll also have been taking the steps to avoid this notorious middle income trap that many countries have fallen into. Out of many countries that reach a $4,000 per capita income, many struggle around that point, mainly because they don't see an innovative way of going forward, because there are new challenges that countries at that level face, and we have looked at all those challenges very, very carefully, and the central bank has developed various types of strategies for that, and the 5 hubs that we have will be one of those, in order to ensure that we have a seamless movement beyond the $4,000 per capita income to 7,000, 8,000 and so on. The issue of the change in demographics would also be a factor in our 2020 deliberations. And most importantly, continuous political stability and policy consistency would need to be ensured. Political stability is very important, and you find that in many countries the economies falter and struggle when political stability is not there. So ensuring that political stability is maintained and the policy consistency is maintained is also another important factor if you have to move forward seamlessly. So this to-do list, my dear friends, is a tough one, it's a formidable one, but it's a doable one. It's not something that it's in the pie in the sky, it's something that we can do, but it needs the support as well as the commitment of all stakeholders, and all stakeholders fit into this overall vision and to translate it into action, and that is what will make it happen, and that's very, very important. Colombo is a reflection of our country's changes. 2014, that's what our country looks like when you look at it from the goal phase. And we got Ernst & Young to do us a study about what 2020 would look like. And based on the development activities that Sri Lanka is presently working on, as well as some of the approvals that have been already given, we find that the 2020 would look something like the bottom part of that slide. So that's a transformation that our country would have, and that's a transformation that we should all work towards. At the same time, we are also focusing a little beyond the 2020 now. I think we have to now plan the country's entirety of the workforce, the infrastructures, to reach a particular point in 2040, which is important for us to lay the foundations for today. It's only if we put those foundations now that we can go to the future, and that's something that we'll have to work towards. Sri Lanka today is at a per capita of 3,280, which is ahead of the Philippines but below Thailand. But we believe that from next year onwards, we'll move into where we call the upper middle income levels. And there we have to work diligently to move the country with a nearly 8% growth. And if we were to do that, Sri Lanka by 2040 could be where Republic of Korea is today. Korea managed to get where they are today after 40 years after the end of their conflict. Sri Lanka would probably do that within about a few years less than that, and that's an important milestone for us. And we hope that all the stakeholders together would be able to deliver on that promise and the promise that our country has. And I would like to urge all of you, as well as the ministry, to work on those lines, at the same time to be innovative in what they are doing, so that together we can deliver on the promise of our country. Thank you very much.